Thank you for joining me. Um, this conversation is really just to give a quick overview student loan that will affect you or your student in the future. Today, millions of people are in default, yet millions more students sign up each year for the same student loans that other people are in default on. So how does this information affect me? Why does it matter that other people are in default when I do not have student loans yet or my student loan payments are not due? So let's discuss that. What is default and how could this happen to me? Default pretty much means that you're not able to make your loan payments in a timely manner. Some people are unwilling to pay and some people just don't have the extra money to do it. However, I find with most of my clients, anyone that has the money is willing to pay their debt. So even the person that is unwilling is not because, oh, I have debt and I'm just going to ignore it. More than likely, they're making a choice to either pay on their student loan debt or to pay their rent or mortgage or to buy food for their family or to have gas for their car to get to work. So in either situation, whether you're unwilling to pay or unable, I find that most clients have this situation just because they don't have enough to cover their daily expenses in addition to paying off their student loan debt. Usually this happens able to find a good paying job. Some people are overqualified. You go and apply for a job because of the salary or because you need income, but because of your degree, they don't want to pay what you're worth. Other people apply for a job in their field and get the runaround because they don't have experience, which can be frustrating. You put off working so you could focus on school. And now that you're finished with school, you're having a hard time finding a job because you chose not to work in order to achieve your degree. That sounds kind of crazy, especially since the goal of going to college is to qualify for higher paying positions and things like that. It doesn't make sense that me putting off working to focus on my education is now hindering me from finding a job. So default can affect you in a number of ways. One thing is that you accrue collection fees. If your student loans are in default long enough, they may pay other agencies to try to reach out and collect payments from you. The agency itself may have agents call to try to set an arrangement or get any type of payment for you, but that costs because they have to pay those people. And the student loan agencies are not going to pay it. They're going to charge it to your already high student loan bill. Default can also cause wage garnishment. If you go long enough without paying, federal loans and even private loans will seek judgments against you in order to get approval to automatically deduct their fee from your pay. So before you even get a paycheck, people in payroll are already taking the amount due for your student loans to pay it before you even get your check. This can also decrease your credit score and make it difficult to obtain credit for other things you may want in the future, including a home or buying a car, credit card, anything like that. The IRS will also use your tax refund to offset your debt, meaning that you may be expecting a few $1,000s from your income tax refund. However, they take it to apply it to your defaulted loans. Being in default can also make it difficult to find a job because some jobs now check your credit score. And with being in default, lowering your credit score or your credit rating, employers may not feel that you're dependable or reliable because you're not taking care of the debts that you chose to earn. Often they don't care about what caused you to go into default. They just look at the overall credit score and that you're not keeping up with your timely payments. So if you can't be trusted to keep your word from when you signed up for these student loans, how can they trust you to keep your word on the job? And then you can also have a difficult time returning to school. Some of us end up going back for another degree or another certification because we don't make enough. We don't make enough to pay this debt. We don't make enough to pay our mortgage. We don't make enough to buy food. We don't make enough to have gas on a consistent basis. So some of us may go back to school in the hopes of qualifying for a better paying job. However, if you're already in default, it'll make it difficult for you to apply and obtain student loans for future studies. This can also affect your standard of living. As we discussed earlier, the home buying process, even if you're not in default, they compare how much debt you have to how much you're making. And if your debt to income ratio is not great, you won't qualify for student loans. No matter if you're in default or if you're paying on time, it doesn't matter. If you're not making enough money to cover your student loan payment in addition to whatever else is on your credit report with the house that you're applying for, you'll have a difficult time going through that process. And some people don't get approved specifically because of the amount of student loan debt they have. The same happens when you try to buy a car. It's not as stringent as the home buying process. However, your debt to income ratio does matter when you're trying to qualify for a car. And if you are the type of person or the person that ends up in default, it lowers your credit score, which makes it more difficult to qualify for your car loan. And if you do qualify, your interest rates will be extremely high simply because you're having a hard time maintaining your student loan payments. It can affect your ability to take family vacations and even pay for common needs. Because like I said, even if you're not in default and making your payments on time, depending on the type of student loans that you have, your payments could be a few hundred or over $1,000 per month. So if you take your current income or even the income that you expect to make and deduct a few hundred to $1,000, maybe even more from it each month, how much will that leave for you to spend time with your family, go on vacation, go visit other family out of town, or just take a break from work, period? And then paying for your common needs, affording your mortgage, keeping your lights on, buying food, extracurricular activities for your kids, whether they play sports or participate in different clubs. The amount that you're paying or are unable to pay on your student loans will affect all of this. So how can I avoid this obstacle after college? I don't foresee it being a problem. Everyone says when I go to college, I could make a lot of money. So I don't even see why this matters to me. The reason it should matter is because there's no 100% guarantee that you'll be able to secure a job in your field or secure a job that's going to pay enough to make these payments. Because once again, if you're paying the full amount of student loans and you have $30,000 in debt and up, that monthly payment could be a few $100s to a few $1,000s, especially if you compare it to a car note. Most of us have cars under $40,000. That's the average amount for student debt for people who have a bachelor's degree going up into graduate school. A $40,000 car note could be anywhere from $300 to over $700 or $800, depending on your credit score. So the same will apply to your student loans. Having $40,000 or more, you can expect to pay a few $100s or more per month. So that's the biggest reason why you should not only take advantage of learning how these student loans can hinder your future income, but also find ways to limit the amount of loans that you'll need. And the third thing we talk about are non-traditional ways to begin saving for college, whether you create side income or work a minimum wage job. But signing up for our Cash4College membership, you get access to all of this information. We go in depth to make sure you fully understand how this debt will affect you in the future. We provide real examples from real people who have gone to college for the entire purpose of making more money and getting a better job. Once they graduated, they have a job in their field but may not be making enough to pay their student loan debt. We also Compare colleges. We want students to think of multiple colleges to go to, whether it's community college, four-year university, in-state, out-of-state, private college, or public university. We want you to compare them. Find out what the real cost will be, and then make choices to limit the amount. If you're going out of state, choosing an in-state school automatically decreases your tuition by a few $1,000s. And those are the type of tips and information that we would give your students to help them limit the amount of cost they expect to pay anyway. And then thirdly, we find different ways to help them begin a college savings account. Most people already know about scholarships and have already started applying and just need to work on their essays. But what we focus on is getting them to think about creating side income, which could bring in more money than a minimum wage job, but also take less time away from their studies. The membership access for this is $37 biweekly, and members receive monthly webinars on financial literacy and income creation. We'll remind them on a regular basis to apply for scholarships and practice their essays. This is something that we will drill into them because all of us know scholarships are technically free money that don't have to be paid back, and generally you just have to meet a few requirements and write an essay to qualify. We'll also have group coaching on limiting the need for student loans, and that will cover comparing the cost of colleges for the various universities or community colleges that your student may want to go to, and helping them fully understand what's included in this cost, whether it's tuition, books, housing, whether you live on campus or off campus, food, because even if you live on campus and have a cafeteria card, that fee is often included in college costs. And if you're not participating in the cafeteria program, you have to pay for your own food. Those are things that a lot of students don't think about because living at home, food, shelter, bills, all of that is automatically provided for them. Now we're moving into a situation where we have to think of those things for ourselves, especially if we go away to college. And this membership site will help your student remember that and be prepared for it. The membership format will also allow your student to receive consistent access to financial literacy education throughout their college career. This is highly important. Studies show that students take out more student loan debt than they need simply because they're not privy to the information on how this will affect them or don't fully understand how this will affect their repayment terms. This specifically applies to students who qualify for student loans and then also get a few $1,000 refund check every semester. Giving that much money to a student who needs it already, they definitely need this information on financial literacy so they can better understand if they're going to take out that money, how to use it to benefit them versus further putting them in the hole. And then financial literacy in general will help them better manage the money that they make from a job, the money that they expect to make in the future, any money that they create if they make a side income or create a side income with us, and just give them a solid foundation on how to use money and receive money from the time that they start college until they graduate. The earlier you start, the better. Our membership site is accessible for high school freshmen through college graduates because all of them can benefit from our services. Like I said, the earlier you start, the better. So if you have a high school freshman starting now on comparing costs, creating side income, and opening a college savings account, that could mean the world to someone who may not have money to pay for college out of pocket. And that's actually true for a lot of our clients. If you're filling out the FAFSA, that pretty much means that your family doesn't make enough to pay for college. And that's what automatically applies you for either student loans or grants. The access to grants are minimal, and it's on a first-come, first-served basis. So if you don't have the same level of need as somebody or wait too long to fill it out, all you will qualify for are the student loans that you will have to pay back in the future. So starting your high school freshman, and getting them to think about how they can limit the cost they'll have to pay anyway, and then also get them saving and applying for scholarships so any other out-of-pocket costs can be minimized as well. This can definitely limit or eliminate the need for them to have to take out student loans at all. And then also the same for college graduates. Even if you already have student loan debt, our information and our programs can help you work to get on top of that and limit the amount that you take out for future semesters or future degrees, and then also get you prepared to start paying on them early. A lot of people say, well, I'm still in school, my loans aren't due yet, which is completely fine. That's true. A lot of people do wait till they graduate to start paying on them, but that puts you in a deeper hole. So if we can get students to even thinking about, let me pay a little on this, let me make a little extra so I can start sending this in, let me make a little extra so I can limit the amount I need while I'm trying to pay off what I already have. These are the fundamental concepts and conversations and information that will be given to your student when they sign up with us. Thank you so much for your time. Again, this brief conversation was really to discuss the effects student loans can have on your student's future income. Again, thank you for your time. If you have questions or concerns, you can email us at info@incomereinvented.org, and you can also check us out at incomereinvented.org. If you're ready to sign your student up because you understand how valuable this information is and understand how urgent it is that they get started as soon as possible, especially if they're a senior getting ready to go into college and this coming fall semester, definitely take advantage of the programs, take advantage of the information, because we definitely do not want this next generation of students to suffer the same student loan debt obstacles and hindrances that some of us have faced. Thank you again for your time, and enjoy your day.